Hey guys, it's Julie here with TipRanks, and today we're taking a look at two stocks that 5-star analysts recently upgraded to a buy. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two stocks that just recently had 5-star analysts upgrade their ratings to a buy. So today we're going to take a look at these two companies, what it is that they do, and of course how the rest of Wall Street weighs in. Now you can follow along with these stocks over on TipRanks.com or by downloading the TipRanks mobile app with links in the description down below. Just before we get into these companies, this is your reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel too. Now let's get right into these two stocks. First up, we're taking a look at GLBE Online. Their stock trades under the ticker GLBE, currently priced at $31.14 per share. Over the past year, they have declined about 10%, dropping 11% in the last 3 months, but they have seen some green in the past 5 days, gaining nearly 5%. GLBE Online provides e-commerce solutions. They offer a platform to enable and accelerate global direct-to-consumer cross-border e-commerce. The platform was purpose-built for international shoppers to buy seamlessly online and for merchants to sell from anywhere in the world. It localizes the shopper experience in an effort to make international transactions as seamless as domestic ones. The platform increases the conversion of international traffic into sales by removing much of the complexity associated with international e-commerce. They shared their Q1 earnings report just over a week ago on May 20th. Not only did the company come out with a narrower than expected loss, they also had a revenue beat, plus increased their future outlook. For their Q1, they reported a loss per share of 19 cents, which was 2 cents better than expected and a growth of 26% year over year. GMV in the quarter was $930 million, which was an increase of 32%, and revenue came in at $145.9 million, which increased 24% year over year. Their CEO said that the strong results for their first quarter mark a great start for what they believe is to set out to be another pivotal year for GLBE. Recently, a 5-star analyst, James Fawcett from Morgan Stanley, upgraded their rating on the stock to a buy. The analyst is optimistic the company will be able to execute on the planned second half of 2024 growth acceleration, achieve faster than modeled GAAP profitability, and continue to be a key enabler of cross-border e-commerce. Concerns about the growth acceleration missed the forest for the trees, and yesterday's sell-off marks an opportunity to own one of the highest quality fintech assets in our coverage. Following that quarterly report, we also had a 5-star analyst from Bank of America increase their price target on the stock. They did so following the strong Q1 results, and while they noted that one could pick on the 2024 guidance being raised less than the Q1 beat and the Q2 guidance being below the street, they're looking beyond this and raising their price target based on the solid first quarter execution. The GLBE Online stock currently has 8 analyst ratings and comes in as a unanimous strong buy. That strong buy consensus comes with an average price target of $43, which would imply an upside potential of 39.5% from current prices. Looking at our ratings down below, here we have that upgraded buy rating from Morgan Stanley with an upside of 22.7%. That is actually our low-end price target. We have a lot in the 30s to 50s here, and our high-end price target comes from Needham with an upside of 59%. And our second stock recently picking up an upgraded rating is United Airlines. They trade under the ticker UAL, currently priced at $49.52. With some ups and downs the past year, overall they are up 3%. They did climb 25% in the last 6 months, but are in the red this past week, down 4.7%. United Airlines is the largest airline in the world, and that is based on their over 293 billion available seat miles. Their over 100,000 employees help 140 million customers get to over 300 destinations across 6 continents each year. They are the leading carrier across the Atlantic and Pacific, operating direct flights to many international cities. United shared their first quarter report back in mid-April, where they came out with a much narrower than expected loss and a revenue beat. For their Q1, they reported a loss per share of 15 cents, which was far narrower than the 54 cents that had been anticipated. Revenue also came in with an earnings beat at $12.54 billion, beating by $150 million. The company also achieved second-best first quarter on-time departure performance in the company's history. Their CEO noted that they adjusted their fleet plan to better reflect the reality of what the manufacturers are able to deliver, and they'll use those planes to capitalize on an opportunity that only United has, profitably grow their mid-continent hubs and expand their highly profitable international network from their best-in-industry coastal hubs. We've recently had 2 analysts upgrade their ratings on the stock to a buy, and another analyst from HSBC initiating coverage. They gave the stock a buy rating as the firm expects United to take advantage of the new post-pandemic travel dynamics addressing comfort and customer experience. We also just had a 5-star analyst from Citi increase their price target on the stock. They said that both Delta and United Airlines year-to-date share price outperformance versus the sector and the S&P 500 index still does not appear to have eliminated the relative mispricing in the sector. They say that the major airlines, especially United, still trade below their pre-pandemic price-to-earning ratios, while Southwest trades above such levels. And they continue to keep United on their focus list. United Airlines has 15 current analyst ratings, coming in as a strong buy with 13 buys and 2 holds. Analyst average price target comes in just above $67 per share for an upside potential of 35.5%. Looking at our most recent ratings, you'll see here that Citi analyst coming in with an upside of 94%. 2 of our upgrades here from Jefferies and Wolfe Research with 31 and 53% upside. Scrolling down a bit further, we'll find our low-end price target, which is a hold from DBS with a downside of 19%. And right next to it, $98 at JP Morgan is our high-end price target for an upside of 98%. So that is a look at 2 companies that have recently gotten upgraded ratings from analysts and also come in with a strong buy consensus. Let me know your thoughts on these 2 companies in the comments down below. You guys know I always love hearing from you. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always do your own research and due diligence. Thank you guys so much for watching. Have a wonderful day, and I'll see you back here next time.